Plug Power stock is down over 93% over the last 3 years. Of course, I recommended this stock as a sell, and I've repeatedly told investors to avoid this stock. Now, in this video, I'm going to update this recommendation. I'm going to review Plug Power's business again, look at the company's revenue growth, its profit margin, its cash balance, the total debt, and look at the new lower valuation and determine if the stock is still a sell or if it's finally time for investors to buy this dip. Let's get started.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
As I highlighted, Plug Power stock, this is a 3-year chart. It's down over 93%. Hopefully you listen to my recommendations to avoid this business, to avoid this disaster, and you haven't lost this much money on the business, and you're a new investor kicking the tires, trying to discern if this is a buying opportunity. If you have lost this amount of money on Plug Power stock, I'm sorry for your losses. These are huge losses, and this stock and this business has been a disaster for many, many years. Looking at revenue growth over the last 5 years, the business is heading in the wrong direction where revenue is going backwards. In fact, 1, 2, 3, 4 consecutive quarters now where Plug Power's revenue has decreased year over year. And I've been talking about how that might actually be a good thing for this business. Because over the years, as Plug Power has increased its revenue, its profits have gone in the wrong direction. Its cash flow have gone in the wrong direction. This is a business that for every dollar of sales it makes, it actually hurts the company, if you can actually imagine that. That's the unit economics, the problem that I saw in this business, and why I told investors to avoid this business for several years now. I saw these problems for several years. They would make deals where they would sell their products at very, very low prices so that they can announce that they have a deal with Amazon, or so that they can announce that they have a deal with Walmart. You might ask, why would they do that? Why would they make those kinds of deals? Well, because when they go to investors like you, they can promote that and say, look, we have a deal with Amazon. You should buy our stock, right? And that gets investors excited, and that gets investors to give the company money. Plug Power, it seems like, has taken more money from investors than it has from customers. The investors seem like the customers for Plug Power, as I'll share with you a little bit later in the video, how many shares of stock they've sold and how much debt they've accumulated to support these losses in the business. So I mentioned the losses, and they're only getting worse, unfortunately. The operating profit margin over a trailing 12-month period is just keep getting worse, negative 171%. For every dollar they make in sales, the business loses $1.71. It's not built on a foundation that's sustainable. The way the business is constructed doesn't seem to work. There needs to be huge structural changes in this business where it's uncertain if they can navigate those types of changes and still survive as a business. Right now, the viability of this business depends on government handouts, depends on investors continuing to inject capital into this business. Otherwise, when you're this negative in operating profit margin and going backwards, and your revenue is also going backwards, and you're an industry that's struggling right now, the alternative energy industry, especially under the new administration in the United States, that's not really trying to push all of these things on businesses and individuals as much as maybe the previous administration was, despite market forces, despite the weak demand in the market. The previous administration was really trying to push this down people's throats and businesses, trying to really get them to incorporate this technology before it was ready, right? These alternative energy sources are excellent in the long term, and their growth should happen organically. And there should be a little bit of support from the government to facilitate the advancement of these newer generation technologies, but to a certain degree, not to a degree where you're trying to force it down people's throats when the ecosystem is not ready for it yet. It needs a full ecosystem. Everything needs to grow proportionally in order for these technologies to work. You can't just try and push one side of it without having the entire ecosystem building along with it. And so Plug Power, not in a good position, and it's only getting worse. And I mentioned that, you know, investors are the ones giving the company most of its money, because if it's losing that much money on the bottom line, where is it getting the money from? Where is it getting the money to lose? And that money is coming from investors for the most part. Some of it from the government uh, and investors. So this company has gone from around 175 million shares outstanding in 2015 all the way up to 902 million shares outstanding as of the most recent update. That's a huge dilution of shareholder value. That means they've added new shares. And if or when this company ever becomes profitable, I think profits are a pipe dream right now for Plug Power. I think survival is what they should be aiming for, not profit. Just survive and hope that there's some dramatic change in the technology that makes this business viable. Just keep itself alive, just to give itself a chance for some jackpot, for some big regulatory change or something that makes the business viable, some miracle, because under the course of normal operations, it doesn't seem like there's anything they can do, right? Management has been trying to operate, trying to find a way to make this business work for more than a decade, more than that even, and they haven't found a way. So when it's this much time and it's this much lack of success, it's a good sign that this business is just not viable, that there just isn't something that can be done, right? Because the the management team is very interested in having this company survive and be profitable. And if they still haven't found something, some way to make this business viable and long term able to survive, then it might be that there just isn't anything that can be done. So even though the stock price is down over 93% and it's trading at a price to sales of 1.5, I guess you could tell by the tone of my commentary that I'm not liking this business. So to update my recommendation on Plug Power stock, do I think this is a buying opportunity? I don't think so. I'm still keeping this stock rated as a sell. And again, reiterating that this is a company that I would try to avoid as an investor. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.